All right, good morning, everybody. How's everybody doing? I feel like this needs to be a little higher. Okay. So today I just wanted to make a quick video and show you guys. You can see here, I was able to lock in $4,460 today, and this is definitely a lot of money in one day for a day trader. And the whole reason why I wanted to make this video is to show you, okay, so every trade that you take is going to chart a certain way that's going to give you a certain level of confidence that you can expect it to perform well for you. So in those moments where things are basically doing exactly what they should be doing, um, that's when you want to really go in hard. Like that's where you want your big position size. If you're going to go all in with whatever you have in your account, if you're a day trader, maybe you have like $30,000 as like your full position size that you're able to do. This video is about when you see those moments. I don't exactly look for those moments. I mean, I look for good opportunities, but when those opportunities turn into something that show me like, okay, this is doing exactly what it's supposed to be doing, then yeah, you obviously want to go in strong with those, and still, you still need to manage your risk. Obviously, the more money that you have in a position, the more money you will either make or lose as that stock moves up and down. So I want to just here, let's pull up the chart. Okay, so this is EYES Eyes, Second Sight Medical Products, and this I was watching this from pre-market, and okay, so basically, number one, this is going to show you the importance if you're not using candlestick charts. Um, this is showing me the staircase upward all morning. Okay, so you can see like right here, this is 6 a.m. So like a little bit after 6 a.m., pushed up, we got these higher lows, right? And we pushed up and got these higher highs, and we kept this pattern going throughout, all of pre-market, right? Now you can see right here, this candlestick is still in pre-market, and it came back up and it reached a new high. Now when the market opened up, it kept climbing a little bit, and then here I can even zoom in on this a little bit. Okay, so you can see the market open right here where it turned black, right? So it came back up, and then there was this pullback, and as soon as it pulled back down to the EMA line, it immediately used this as a support. And I was able to recognize that because, like I said, I had been watching this from pre-market, waiting to see what it was going to do. It had a lot of news on it right now, and it was becoming very hype. We can see these blue bars here in the background. This is the volume of trades. So you can see right when market opened, there was just this huge influx of volume. There was a lot of people paying attention to the stock, right? So it pulled back, and when it hit this EMA line here, this is where I bought in the first time, right? And when I bought in, I knew, okay, like, I didn't buy in the first time it hit here. I bought after it came up where this red candlestick is and pulled back. So when it pulled back here, and it dropped below and came back up. As soon as I saw this green candlestick right here on the EMA line, this is where I bought in. So I bought in, I was at $9.21 when I bought in. So I bought in here, and then I immediately set my stop loss to be right below this red candle here on the VWAP line. So that was about $8.76. Now, mind you, I went in, I made a couple of trades now, so you can see I have 12,000 shares. But I initially went in with 2,000 shares, and as it started to come up, I averaged up. So I bought another 2,000 shares. And when I did that, I was almost at my full position size, based on what I have in my account that I'm comfortable day trading with. And once I got about where this candle was, this previous high, once I broke above this, I ended up selling my position, because once I broke above this, now it could keep going up, which it's likely to do if you got that new high. But at the same time, it can also turn and start to drop back down. So that's where you got to manage your risk, knowing how to exit a trade. I expected when I bought it down here that I would either sell at my stop loss, which would be on this middle VWAP line, or I would sell somewhere around this candlestick. That was my goal going into this trade, right? I'm not gambling. I have a strategic plan of what I'm trying to accomplish and what I can expect out of the stock. Now, after I did that and I locked in my profits, it kept climbing, right? And you could see that rate just shy of $13 here, it started to pull back down. And it pulled back down and it hit this upper VWAP line here. And then the next candlesticks started right about at that VWAP line and it pulled back. And once it pulled back to this 1205, you can see then it came all the way back up here to about 1273. And I re-entered the trade at some point between this upper VWAP and this upper wick on this candle. I don't remember exactly where I bought it on that one, but as I bought it on this one, I went in with the full 4,000 shares because again, the momentum on this stock was um, taking off, and I knew what it was going to do. I didn't know for how long though, so I wanted to just go in with my full position size and then be able to get out very fast. Just a quick, they call that scalping, right? So I jumped in with my 4,000 shares, and it went up a little bit, and I don't remember where I ended up exiting again on that one, but I was able to lock in more profits. Okay, then you can see we hit this high, and we came back down to the EMA line. And I didn't buy in here because we approached about the same level where we had this consolidation, right? So now I don't know if it's going to either bounce back up or if it's going to continue going down. And as you can see, it did continue going down. Now once I hit this spot right here, where I saw that it started identifying the support around $11.30, and it started going back up, I went in again with another quick scalp. And the reason why I did that is because now we got this lower low. So now that we have this lower low, we're now in a downtrend. And if we look at our EMA line, it's pointing downward. So that's telling us we're in a downward trend right now. Now I know it's pushing up right here, but it's, again, like we had this staircase on this side going up. Well, now we have a staircase going down. So as it was going up here, I knew that it was going to go up for a little bit, but I knew that it wouldn't be a whole lot. So that's why I went in, again, with my full 4,000 shares, my full position size, and I bought in. And as it went up a little bit, I only waited for it to go up maybe about 4 or 5 more cents, and then I sold and I locked in more profits there. And that was the last trade that I made on this. And after that last trade, I was at $4,460. And I let me see. After I did the first trade, I had $2,220, and then when I did the second trade, that was from here to here, that brought me up to $3,540. And then after this play here, so that way you can kind of get an idea of how much I was locking in on each one of those trades. The first one was the largest one. I pulled in that $2,200, and then I got a little bit less than that and a little bit less than that on those second 2 trades. I will say this: I only have a $500 a day goal, so I really didn't need to take those other trades as well. It's just I've been trading long enough, and I trade a lot of stocks in this price range, and a lot of them are pharmaceutical, medical, and they typically react similar. So when you see something that you recognize in a similar type of stock, again, this is a point where you want to take advantage of the situation. I mean, always make sure to manage your risk, but this is now, okay, you're familiar with this. All right, let's lock in, the biggest that we can. Obviously, if you have 5% of $5,000 in a trade versus 5% of $30,000 in a trade, you're going to have 2 completely different, numbers that are your profits. So, see, we could see right here, when we established this here, this would have been another good time to take another position. I feel at this point now it's probably a little late because we're still in this downward trend. I'm not expecting it to get up to like this $12.43. And as we can see, since we've been talking, it pulled back a little bit already. Now it could get back up here to this, $12.40 and exceed, but it hasn't really shown me anything that's making me believe that. The good news is it did bounce right on this middle VWAP line. So this kind of, and again, I'm looking at the 1-minute chart here. So like the fact that it bounced on this VWAP line is a good sign. That's telling me that it's still kind of in that uptrend. If I look at this on a 5-minute chart, it's going to be a little bit easier to see. See, so on the 5-minute chart, we had this big, long, you know, and this is why I did put a post on my Facebook channel about this. It's important to switch back and forth between the 1-minute and the 5-minute chart because it does help you see a little bit better what this stock is doing. If I would have bought in at market open looking at the 5-minute chart, the way it's charting, okay, if I bought in at $9.21, watching this chart, I probably would have held it up to about here and just locked in a very large number, excuse me, on that first trade that I took. So it's good to, like I said, bounce back and forth, and it's super, super important that you guys learn how to use these candlestick charts if you don't know how already. I know a lot of people are starting out on things like Robinhood or Webull, and they just use the line chart. And I understand that it's, pleasing to the eye because you don't have all this stuff all over the place. But it's not that difficult to learn. I have plenty of other videos on my YouTube channel that explain how to read candlestick charts, how to add these indicators. So educate yourself. It does make it a lot easier, especially if you're day trading and you're getting in and out fast. You know what I mean? It really is the world of difference. So, like I said, the way this chart's on the 5-minute chart, I would have probably been able to lock in a much bigger percentage here. What are we looking at? About, almost 40%. And looking at this chart now, like I said, we bounced on this middle VWAP. So if I buy in here, I'll buy in right now because I feel comfortable doing it. And I'll do another quick scalp. So if I buy in with 4 grand here, or I mean 4,000 shares, and I get ready to sell, go to my limit order. Okay, see, I bought an 1167. We're at 1175. It's moving in my direction. All right, it's starting to pull back a little bit, so I want to be ready to move quick. All right, 1177. Lock it in. There we go. All right, now I'm at $5,300. So that's what I'm talking about, is taking advantage of these situations. I was in and out of that trade very quickly. I picked up a couple extra hundred, almost another $1,000, and look, it's still continuing to climb. This thing is charting exactly how you would want to see, and it's providing that opportunity. So that was the whole purpose of why I wanted to show you guys this trade that I made this morning, or this series of trades that I made, and why I went in strong. Look at this MACD right now. Again, I'm on the 5-minute chart. I could keep holding this. I feel confident the way this is charting that I could probably get back up to about this $14 mark. So I'm not going to be greedy. I don't want to put a lot of risk up at this point now. $5,300 is way more than I typically make on one day. So I'm not going to take another trade and risk it. But again, I just wanted to show you guys what happened today and why I was able to lock in so much money. So I hope you guys learned something from this. Please feel free to hit that like and subscribe button. Also check out, I have under Bull-Throttle Trading and Investments on Facebook. And I guess I will see you guys next time.